Steve and Mead again, another Bullseye Guy shortcast. Again, these are little 2, 3, 4, 5-minute snippets. They're not the full 30-minute podcast that you can find on the bullseyeguy.com. What am I going to talk about today? Crypto. Primarily crypto investing. We're still in the investment round. We're still raising money. This is an interesting space and time in the quote blockchain world. But again, there's a massive distinction. People go, are you a blockchain company? That makes no sense. That's like saying, are you an internet company? Blockchain is the enabler. The internet's an enabler. I'm not a website company because I use a website. We're not a database company because we use a database. We're not a JavaScript company because we use Java. We're not a blockchain company because we use blockchain. So when people are investing, they're going, oh, well, what do you think about blockchain as an industry? Is it a good investment? What should you do about the crypto? They're distinctively different. Blockchain to me is an industry. It's not an industry, it's a technology for industries. Should you invest? Look at a software company. Does that company use blockchain or access or databases? What's the business model? Should you invest in something else? Well, that's what I want to talk about. I segued into, are you a blockchain company? Let's talk about the investments. Investments to me are stratospheres. If you're an angel investor, has nothing to do with blockchain or crypto. Angel investor, high risk, like the project, like the team, get in early, maybe 10, 20, 25,000, 50,000, maybe a bigger super angel. High risk. 9 out of 10 angel investments unfortunately fail. Does it mean it's risky? Of course it's risky. Does it mean investing doesn't work? No. Does it have anything to do with crypto or technology or blockchain? Nothing. But there's been this evolution where traditional financing and then crowdfunding and then crowd financing came out. And now crypto technology, these crypto assets, are a new type of investment vehicle. Are they risky? Of course they are. But if you want less risk, you might go somewhere else. An angel investment's risky, 9 out of 10 don't make it, and there's no liquidity, meaning you may be stuck in that investment for years. I have friends that are in Uber. They loved Uber until they did in a decade. It took them to get an exit. Liquidity is a big deal. Let's say you want a little more risk appetite. Speculative. You're a speculative investor. You like risk, but you also want some potential liquidity. Well, we've got a great system in America out there called the OTC, the over-the-counter bulletin board. And on the OTC, there's 2 levels. There's pink sheets. What are pink sheet companies? They're non-reporting, non-auditing. That means they don't have a lot of financials. They may not have all of their systems in order. Heck, they may not even have a product yet. It might be a gold mine who thinks they're going to discover gold. And if they do, that becomes their product, but they're still mining. It might be a cannabis or CBD company who says, hey, we're going to have this great crop coming in, but it's not there yet. But they need money to grow that. These are speculative. Are they risky? Of course they are. Is it fraudulent? Are they all a scam? No, some are. Some startups don't work. You've got to pick good projects. But in that OTC level, pink sheets are more risky. There's more volatility. There may be less volume for you to get out of your stock, but it's potentially easier for a stock on a bulletin board to go from 2 cents to 4 cents. That's 100% return. Or 5 cents to 10 cents. It's 100% return. That's much easier than Amazon going from 1,500 to 3,000. Why is that important? Let's move up the channel, up the food chain, above the bulletin board, above the OTC, right? High risk, speculative, bigger potential returns, some volume on some stocks where you might have liquidity. Some stocks don't have liquidity. You have to wait to sell, but you have that opportunity. Angels, you don't have a lot of opportunity. We love angels, but you're stuck until there's a liquidity event some point, probably years in the future. Next level up, kind of the NASDAQ. And there's some huge companies in NASDAQ, if I remember ones that are there. Microsoft, Oracle, a bunch of technology companies. Why were they in NASDAQ? NASDAQ was about growth. Growth, the stocks, the growth, the Amazons, the Googles. I don't remember which ones are where. I don't trade at that level. But NASDAQ was about higher growth, bigger companies, more potential revenue. Still growth, but probably not the 100 to 200% growth you might get in a more risky speculative market. But NASDAQ had more volume, more reporting, more requirements. Still growth opportunity. Above that is the New York Stock Exchange. And we see it all the time. The stock exchange is up. Oh my God, the stock exchange is down 400 points. 400 points when the stock market's at 25,000 is not insignificant, but it's insignificant against the percentage when the stock market was 10,000 and it dropped 400 or 500 points. The press, again, messes up the messaging. As a percentage, 500 point drop. Oh, it's horrible. Not against 25,000. 500 against 10,000 is a bigger swing. But once you get up into the bigger cap, this is not the NASDAQ, the stock exchange, the NYSE. More revenue, more reporting, more stability, less failures, but also less return. What's your risk appetite? I get frustrated when people say, oh, well, crypto's risky or it's a scam. No, it's a new funding technology. It's a new way to look at financing companies. But I will say this. This is where my frustration with the industry has been. The biggest lack or the biggest challenge in startups, in my opinion, is lack of capital. As a traditional startup, you have to raise some angel money, you have to build a product, kind of hope it works, get some Series A money, beg for more money, get a little more traction. If it works, you got to go back again and beg for more money. And each time you're spending a lot of effort raising money as opposed to building a company. While the capital is supposed to be aligned, the time commitments are drastically different. Blockchain technology enabled crypto tokens, ICOs, IOs, whatever you want to call it. It enabled a new way to do funding, potentially with less friction. Is there fraud in there? Of course there is. You need to root it out. There's all kinds of new systems coming out with artificial intelligence. Super excited. Root out the fraud. We don't want bad actors in this industry. But the opportunity for a company early stage to raise 3, 4, 5, 10, 20, 30 million dollars, their capital runway, their execution path, their ability to use a Silicon Valley world, which I hate, pivot. Pivot to me means I don't know where I'm going. I like the word tact. Tact means I have a goal. It's like sailing. You know your destination. You just have to make adjustments along the way to get there. Pivot to me means I don't know where the heck I'm going. But again, just me, back on point. If you have more money, you should be able to have a more successful project. I'm waiting for more projects in the blockchain space, whether that's gaming, whether that's software, whether that's food security, integrity, invoicing, it doesn't matter. We need more success in the industry. We need more adoption. We need more investors. We need more believers. I'm trying to help move that needle forward. Hopefully this helps. Again, I'm Stephen Mead. This is the Bullseye Guy Shortcast.